In this video, we will talk about On Holding and whether it's a buy at the moment. Thank you for your comment, Alessandro. You see here, Alessandro asking, nice video, thank you very much. What do you think of On Holding, On, a company that produces mostly running shoes? So let's start. In case you are new to this YouTube channel, welcome. My name is Christophe Nour and I've been investing in the stock market for almost a decade and I have achieved a performance of 25%. And thank you for all your recommendations, guys. It's wonderful. You give me some strong ideas. Some companies I know them, some companies I don't know them. For On Holding, I don't know it. So you have a fresh view now live. Okay, so On Holding is a company from Switzerland listed in the US. The market cap is $20 billion. Let's see what they have, because you maybe know some shoe companies, Dexter Shoes, or you have Crocs, very famous on Twitter. But what about this one? On Holding is a premium performance sport brand rooted in technology, design, and impact. Its shoes, apparel, and accessories products are designed predominantly for athletic use, casual, or leisure purposes. It does not manufacture the products, okay, or the raw materials, okay, and relies instead on third-party suppliers and contract manufacturers. Very well. Geographically, it derives a majority of its revenue from the Americas and rest from Europe, Middle East, Africa, and APAC. Okay, very well. You are talking about a company that is growing its revenue from 2019. We only have data since 2019. Is it a recent IPO? They IPO'd in 2021 when money was free. Okay. Lack of visibility for me. But still, okay. 2019 and revenue is growing double digits. Some very, very nice revenue growth. What about net income? Whoa. Net income took a big hit in 2021. What happened here? In case you want to continue your due diligence, Alessandro, what happened in 2021 and now they start to make money again? Okay. What about the cash and the debt for the balance sheet? Seems like they raised a lot of money in 2021. My guess is they issued more shares or sold the division. I don't think they sold the division because of negative net income. My guess is they raised more shares. That would be my guess. We will scroll down and see if this was the case, if I have a good gut or instinct or not. But okay, for the balance sheet, no major problem. They have $600 million of cash, $300 million of debt. So net cash of $300 million, and we are talking about no big deal because this is a company with a market cap of $20 billion. So balance sheet, not an issue. What about the free cash flow? Free cash flow is a complete mess. Free cash flow is a complete mess. That would be an automatic pass for me. That's it. I don't know how much time I spent. 2 minutes. That's an automatic pass. Operating cash flow is a mess. Free cash flow is a mess. You only have one profitable year when it comes to free cash flow. Net income is here. Okay, and what about the return on invested capital? You talk about an unprofitable company, so obviously it's impossible to analyze. And what do you see? Major share issuance in 2021. Here, that's why you have a lot of cash in 2021. So I suspect they struggled a lot in 2021. Either they did an acquisition, because assets grew a lot here. Let me check. On holding acquisition 2021. Let's see. If it's not an acquisition, I don't know what happened. 21. Sorry, that's in French. Oh no, not an acquisition. They just raised some cash for the IPO. My bad. Okay, I was right on raising the cash. I was wrong on the acquisition. Okay, very well. And they look at the shoes. Yeah, I'm not a shoe guy, so I don't know much about the shoes, the pricing of the shoes. I just know that this sector has some good tailwind and is a big beneficiary of the COVID era. So yeah, they raised some cash for the IPO, public money, capital market, 15% share issuance here. And still seems like they are struggling. I mean, on a quarterly basis, what do we see? Revenue increasing. Net income is a mess. Cash balance going high. They don't have a lot of debt. Cash is accumulated. And what about the free cash flow? Free cash flow is much more stable now. Congrats. They continue to do some share insurance, but that's minor. Okay, very well. And the margins, gross margin 60%. Yeah, you rely on third-party manufacturers, so that's normal. Net margins are are fluctuating a lot. PE ratio of between 50 and 100. That's a lot. Operating cash flow of 80. Yeah, clearly you have no visibility on this one. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. I want to check something. I want to check the investor presentation on this one, what they talk about. What are their plans for 2025 or 2026? Let me check here. Download PDF. Because maybe they announce a new plan for, if you want to see another shoe company, you have Decker's Outdoor. I like it better. You see a longer track record, more revenue growth, earnings growth, always profitable, nice free cash flow, buybacks all years long. So from all the point of views, I prefer Decker Outdoor. So I won't buy an on holding. The PE ratio for Decker Outdoors is around 30, 40, nice margins, proven business model, and the stock is a 100 bagger. That's a wonderful stock. And additionally, if you want another idea in the same industry, you have Crocs. You know Crocs, you know the shoes. Small company, the stock is a mess. It's one of the darlings of Twitter. People love to talk about Crocs. I don't know why. I don't own any of their products. And same thing, you see some nice growth since 2020. They do some nice buybacks over the years, but they accumulated some debt and they did a stupid acquisition, which was not very good for them. But okay, let's go back to on holding, and that would be it. That's 100 pages. Let me skim through it really quick. Okay, they talk about this, sales. I want to see their plans. They have executed their strategy. Let me put my face here. They have executed their strategy. Continue to drive excellence. I want to see some good numbers, maybe. No. Brand awareness. Half of the revenue is from Switzerland. Okay. No communities. Yeah, it's like I don't see the mode here. It's difficult for a shoe company to have a moat. You have the brand, you have the marketing, you have the name recognition, because it's not about comfort, it's not about tech. I don't see some key differences here. Nike is different from the rest. Adidas is different from the rest in terms of brand, I mean, not in terms of product. Global. Okay, they talk about the spirit. Okay. No, they plan to double the sales over the next 3 years. Okay, culture. Okay, let me continue. What do they plan to do? They innovate, more shoes. They talk about diversity. They talk about the culture. Okay, they work also for the tennis, some sports. They mostly do shoes, training, energy, different kind of shoes. Yeah, I mean, I see nothing special about it. It's a simple business model. Doesn't mean that it will fail or win big. Distributor. Okay, they are available in over 60 countries. That's nice. And you have outdoor shoes, tennis shoes, pad shoes, training shoes, running shoes. Great. Amazing. Many markets at very early stage. Yes, I mean, we will always need shoes, so this is a growing market. Okay, they have an app. They want to do more tech stuff. They have different locations, flagship. Okay, store rollout. They want to add more stores, be on e-commerce, expand the network of stores, and have more sales per store. New brand, new products. On presence, percentage of estimated global key allocator. Okay. we have significant runway to build the presence. Yeah, no kidding. You have another player that they mentioned called Dix. What? I'm not familiar with the company, so Dix shoes stock. Dix Sporting Goods. What is the ticker symbol for this one? DKS. Okay. 20%. You have Foot Locker. I hate Foot Locker. I don't like it. NJD. Okay. Boost e-commerce, and they go into China. Good luck. Good luck. Okay. Dream On, apparel share. They plan to have some nice margins, 20% EBITDA margins, and they plan to increase their exposure to China. Okay, very well. Let me go back to this page about Dick's Sporting Goods, because the same thing. This is a very good company, $20 billion of market cap, and you have better financials, better growth. They have some debt that I don't like, but good free cash flow generation, some buybacks, and trading at a PE ratio of 15. So it's quite decent. But to go back to Onan, this is my take. I don't like the financials so far. I don't like the unpredictability compared to other players. It's all about opportunity cost. If they plan to double their net income, that's great. You mean you have a PE ratio of 50, or even if they double it again, PE ratio of 25. Okay, I can buy other players at a cheaper price. And but wait and see. Thank you for the recommendation. I will monitor this one if they do what they plan to do, because it's very rare to have a good pick from Switzerland. Switzerland is not very well known for being good stock activist and good for good capitalism, shareholder returns. So if I had to bet on a country, it wouldn't be a company on Switzerland, but you never know what can happen. So thank you for the recommendation, and I wish you a good day. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.